How we doing, traders, and welcome to the SPACs attack. Let's get it started. How we doing, traders, and welcome to the SPACs Attack, the best SPAC show in the world, where we give you the information so that you guys at home can be making your informed trades. I'm super excited about today's show. This is what we do here, guys, on SPACs Attack, is really bring you the experts, the executives, the kind of the information that you guys need to be accurate in a kind of relatively new area. So let's go ahead and bring my man, the brains to the show, Chris Katje. How you doing, Chris?
Doing great, Mitch. How about you?
Super excited to have you back, man. We gotta get you lined up. We're gonna get you with a really good microphone in the future. We're definitely working to improve the show, but excited to bring the information because that's what it's all about, guys. That's why we got Chris here, the brains to the show. So let's get into the headlines because I know there's a lot going on out there, even some that we mentioned just weeks ago. So let's go ahead and take us back, Chris.
All right, guys. Yeah, before we dig into some of those deals, do have some notable headlines for you. So up first, we have STPK. So that's the SPAC bringing STEM public. It's a energy storage company. They were given a $100 price target by Citron Research yesterday. It was called the most compelling alternative energy stock Citron has seen since they reversed their opinion on Tesla 2 years ago, saying that they have real customers, real revenue, and a huge total addressable market. So again, Citron, notable bear, coming out with a $100 price target on STPK here. And also I have seen this name pop up on some of the CNBC shows. So this one is starting to get a lot of attention, and ramp up. So this is one to definitely keep on your watch list going into that merger. Then we have RIDE, R-I-D-E, so Lordstown Motors. So this was the big gainer yesterday. We talked about that 100,000 pre-order announcement for that endurance pickup truck. We mentioned this one on the show last week on Friday that they had a large order that was reported by one of the business websites, and then they released that official number of 100,000 yesterday. So, it's all about timing here, and riding those waves up. And if you listened to the show last week, this wasn't a huge surprise that they were going to have that big number announced soon. Then we have EXPC. So this is the SPAC bringing Blade public. So helicopters, urban air mobility. So this is the latest SPAC to be added to a Cathie Wood ETF. So shares are up today on that announcement that yesterday ARQ added 50,660 shares of EXPC to that ARC ETF. So again, we've seen with IPOB now open, with Skills, SKLZ, and with LGVW, these shares trade higher with the Cathie Wood news. But so far, all the ones that she has added to those ETFs, again, even if you bought in the day after the announcement, you are still positive. So it looks like she's recognizing the long-term growth here with these ads. And then we have GSAH. So this is the Goldman Sachs SPAC. So shares were halted earlier today. This one has seen a lot of volume. This is one of the largest SPACs out there. So as we announced, and I'll get to some of these recent deals and rumors, we're seeing large inflows to the larger SPACs, really targeting those billion-dollar companies. So it was halted. There was rumors there could be a deal announcement. Remember, this is one that's been linked with eToro as a rumor. I will note that ACTC, which I'm going to hit next, was halted last week on Friday, and then they announced their deal today. So just because shares get halted doesn't mean we'll see the deal that day, but perhaps GSAH will be the next big deal to announce. And then getting to those deals. So this morning we have ACTC, so this is ArcLight Clean Transition Corp, announced that they are taking Proterra public. So Proterra is an electric bus leader. This values the company at $1.6 billion. So current ArcLight shareholders will own 11.6% of Proterra after the merger. Shares will trade as PTRA on the NASDAQ. This includes a $415 million pipe anchored by Daimler Trucks. Also included in the pipe are Fidelity, Franklin Templeton, BlackRock, and Chamath Palihapitiya. Pipe shareholders will own 17.3% of the company after the merger. So Proterra has over a decade of experience as an end-to-end platform for electric buses. They offer 3 services. So Proterra Powered, which offers batteries and electrification. Proterra Transit, the leading electric transit bus company in North America. And Proterra Energy, an end-to-end turnkey charging management system. So they have over 16 million service miles driven with their buses. Over 550 heavy-duty electric transit buses have been delivered. They also have 54 megawatts of charging systems. So over a 50% market share for electric transit buses in North America. So one of their items for growth here is they just launched a new battery manufacturing facility in California. That facility was built in less than 12 months. So that's part of the plans to help with gross margins. So since 2017, the company has reduced its battery unit cost by 86% and labor and overhead costs by 55%. So they have $750 million in orders and in their existing backlog. They see a total addressable market size of $260 billion. That's helped by the zero emission standards that are already in place by 15 states. Also with the Biden administration pushing for electric buses, that market could see huge growth here. And then Daimler, who led the pipe, they're a customer for Proterra. Those first buses are expected in 2021. So Daimler has over 300,000 vehicles in the United States, and they manufacture 1 out of every 3 school buses on the road. So definitely a strong partnership. They're guiding for revenue to hit $193 million in fiscal 2020. And then by 2025, they see revenue hitting $2.57 billion. So ArcLight was one of the SPACs that we highlighted back in December as a Joe Biden play. Audrey Lee, who is part of the management team of ArcLight, she is the co-chair of the Clean Energy for Biden organization. So we called this one out when it was below $11. And then also again last week when shares were halted and around $12. So hopefully some of you were able to get in on this one. And I will note that QELL, who's long been rumored the target for Proterra, shares are down 8% today. I'm not sure what they do next here. And then Chamath out with his tweet, since he was part of that pipe, saying Proterra is North America's #1 electric bus OEM. The company's technology, their lead, and their revenue made this a no-brainer for me. And then our big rumor from yesterday, so CCIV, Churchill Capital Corp 4, rumored to be merging with Lucid Motors at a $15 billion valuation. So Lucid backed by Saudi Arabia's wealth fund. One of the most established private electric vehicle companies, targeting the luxury end right now, but then also working on a more affordable vehicle in 2022. So Peter Rawlinson is the CEO of Lucid Motors. Prior to his work there, he was the chief engineer on the Model S at Tesla. So lots of experience. And then I also noted on Twitter yesterday that Lucid Motors chairman Andrew Leveris has a history with Michael Klein, of course, behind Churchill, as the two worked together on deals. With Leveris was the CEO of Dow Chemical. And also Leveris is listed on the website for Churchill Capital 4 as an operating partner. So here's why I think that this rumor, is really true and this deal gets done. So first, Bloomberg was the source. They've been pretty spot on with their rumors. Klein and Leveris have a working history together, and Leveris is on the management team of CCIV. So if you follow me on Twitter, you know that I followed this deal in detail yesterday. I did buy shares of CCIV. I am now long. This is my largest SPAC position at the current time. I believe this deal gets done, and I think, this was one of the targets that lots of people were waiting for. So I am in this one, hoping that this rumor comes true. And then lastly, our other big rumor is symbol HEC. So rumored to be targeting online therapy provider Talkspace, according to Bloomberg as well. So Talkspace has promotion deals with Michael Phelps and Demi Lovato. This would be valued at $1.5 billion and could be announced this week. Talkspace offers patients licensed therapists, video chat, and text, uses machine learning and artificial intelligence to analyze therapy sessions. They have a partnership with United Health Group, one of the largest insurance providers in the U.S. They also acquired Lasting, a company specializing in couples counseling, in November, and they were just awarded grants from the National Institute of Health to conduct research. So again, another growth area there. Talkspace has pretty good brand recognition thanks to commercials with Michael Phelps. They also were a sponsor of a HBO documentary called The Weight of. We've seen the COVID-19 pandemic have a negative impact on mental health, and then also telemedicine really boom. So, if this deal gets done, I think this is one people should definitely watch. I am long shares of HEC. And I will note Hudson Executive announced the launch of their second SPAC in December, which could mean that they were nearing an announcement for this first SPAC. So I think this deal gets done as well. So that's it for headlines and those rumors and that deal, Mitch. What do you think?
All right. So definitely seeing some movement out there. Super excited. I mean, at the end of the day, this is one that we talked about on the 10 and 11 show, and you guys heard me. I kind of really had that feeling that DirecTV really wasn't maybe that rumor that was gonna fulfill on CCIV. So that was what I mentioned. I mentioned that I was really gonna look forward to see what other companies they could really acquire. And as you can see, this is why we like to get them near 10. I mean, when you look back, this one was even below 10, got to 960s. So if you would have got in there at lower than net asset value there, then you could have definitely been definitely ringing the bell today, at least in my eyes. If I would have been in there before $10 and getting it up there to 15.50s, 16, not a bad move there. Definitely a great trade there. That's essentially like an over 50% move there, above that 15. So definitely keep your eye on this one. We'll see if the rumor gets true. And then let's keep going. This is what it's all about, guys. This is why we're here. So everybody in the chat, if you're new to the show, say hello. Say hello. Hit that like button and let's get going here. Want to say hi to some of the loyal viewers that we have every single day. Our raving fans. Definitely want to say hi to Eric, Steve, Luca, Rual. We even see people tagging us on Twitter, letting us know, hey, I got into this trade at like 9 something, getting up there and selling into today. This is what we want to see, guys. At the end of the day, we want you guys to create wealth. But what we want is for you guys to have the accurate information to make those informed trades. And that's really why Chris and I do what we do here, guys. So definitely a shout out to Sheriff, March, Steve, Sue. These people are in here every single day giving us great tips and great information. Not only that, but hitting us up on the comments after the show, letting us know what they want to see next, what kind of show topics. We had gotten that $10 to $11 show, Chris. We got that suggestion plenty of times. So this is what it's all about, guys. So definitely smash that like button. Let's keep going here.
And I think you were spot on. Sorry, Mitch. I think you were spot on there with CCIV. A lot of the talk was about DirecTV, and it turned out, what if they didn't go after DirecTV? Because I think that's why shares were trading so close to $10. I know myself, I wasn't that excited about DirecTV being, the rumored target. So now that they've announced, Lucid Motors here, I think this one really runs higher. Of course, there is the risk, that rumor doesn't come true, but I think the relationship there and the Bloomberg source, really highlights that CCIV deal. So, congrats on that call from that show.
Hey, not only congrats to me, but congrats to you too, Chris, for ACTC. Mentioned really early with that Biden look. That's one of the great things that I think Chris does. And the reason why he's the brain to the show, guys, is that he knows his research. So definitely look back at our older shows. You might get some ideas from that. So don't only just watch today's show. Definitely look back at our playlist. Try to go through the shows. You might get some some good ideas that you can kind of see how we talked about it, let's say a month ago, how the reaction's happening right now, and what could possibly come from that. All right, Chris, I want to go ahead and bring on our guests now. This is what we do here, guys, bringing you the experts. So, Chris, go ahead and bring them on here. Let's go ahead and announce.
Yeah, guys, I'm excited to welcome back to the show one of the first guests we ever had. So Julian Klymochko, he's the founder and CEO of Accelerate Funds. Accelerate Funds offers 4 alternative ETFs that trade on the Toronto Stock Exchange, including the Accelerate Arbitrage Fund, that's symbol ARB on the Toronto Stock Exchange. He's also the author of Reminiscences of a Hedge Fund Operator, and he hosts the Absolute Return podcast. So welcome back to the show, Julian.
Hey, Chris. Hey, Mitch. Thank you for having me back on SPACs Tech. Glad to be here.
Yeah, definitely excited to have you back as one of our experts that we definitely go to, and not only go to on our show, but I know Chris and I definitely stay up with your Twitter. So if you guys want to get his, definitely look in the description below. There's a whole bunch of links that you guys can get some more information on these ETFs, his social accounts, and more, guys. So definitely look in the description below. All right, Chris. So one of the things that I think is the biggest and probably the most important part of SPACs is kind of really breaking down what they really are, right? I mean, at the end of the day, I know that a lot of you traders out there kind of are just getting into this game and understanding what these investments are. So I'm going to have Julian kind of explain a little bit more here. One of the great things that Julian does is he also does a podcast, guys. If you haven't seen the podcast, definitely check it out. I'm going to go ahead and I'll comment one that I specifically really liked, guys. And this was this 67, The Art of SPAC Arbitrage. So if you guys haven't seen the podcast, definitely check out the Absolute Return, and you could also find that in the description. Let's get into some of the things that I really like and wanted to talk about here, guys. So Julian, and maybe you can help us here. So one of the biggest things that I think is first, what is a SPAC and how do they work?
Yeah, it's a great question, and SPACs have really exploded in popularity in 2020, and definitely the trend continues into 2021. Just a massive flood of issuance. I believe as of today, there are around 305 SPACs trading on U.S. markets. So a big new asset class, over $128 billion in market capitalization as of today. But basically how a SPAC works is they do an initial public offering, an IPO, typically at $10 per unit. And notice that I said unit, not shares, because they tend to IPO as a combination of shares and warrants combined into one unit. So one unit at $10, typically you get one share and around a third, sometimes half of a warrant. Some come with no warrants. Some of these hotter biotech and technology issues, some come with a full warrant. And so guys like us, hedge funds and other institutional investors subscribe to the IPO at $10. Which we've been doing lately in our Accelerate Arbitrage Fund. But that game of subscribing in IPOs is becoming more and more challenging because each one is typically 5 to 10 times oversubscribed, meaning if there's a $200 million SPAC IPO, say tomorrow, demand orders from institutional investors could be as high as $1 billion to $2 billion. So orders are really getting cut back these days. But that kind of goes in and out. If we go back to the summer, SPAC IPOs were very hot in summer 2020, and our allocations were getting notched back significantly. Then October, November, we could get all filled on all of our IPO subscriptions. 80% of SPAC IPOs are trading below $10 per share, which I was looking at that the ArcLight deal today, and that was actually one that I flagged in late September. It was trading at $9.96 per unit on IPO day of September 23rd. And that one came with half a warrant. And then I checked the units this morning. They're trading at $25 per unit based off this Proterra deal. And we are long those units, so shares plus warrants in our Accelerate Arbitrage Fund. So that's one that, it's worthwhile paying attention to these IPOs because that's typically when we buy. We like to own the units, which gives you the shares plus the warrants. So at IPOs, they raise a bunch of capital, call it $200 million, which goes into trust. And this trust account is invested in low-risk, short-term U.S. Treasury bills, basically the safest asset you could have. And the SPAC sponsor is not allowed to touch the IPO capital. Where they get funds to pay legal fees, banker fees, working capital for the SPAC is they typically do a private placement for warrants, a value of generally 2 to 3%. 2 to 3% of the IPO proceeds. So, say on a $200 million SPAC IPO, the SPAC sponsor would put up, call it like $6 million, $10 million in private placement warrants to fund all the SPAC expenses. And the key reason why SPACs are so unique and what makes them a really interesting asset class from our perspective is the risk-reward dynamic. Chris and Mitch, you guys highlighted the so-called SPAC pop that we pay attention to. At post-deal announcement, many of these shares have been rallying significantly, whether it be the Churchill Capital deal recently announced, or rumored, I should say, the ArcLight Clean Proterra deal this morning, and so on and so on. You're seeing them rally 50, 100% in certain cases. But the most important aspect is that a SPAC, a sponsor, raises IPO proceeds at $10 per share, and they have a fixed term in which to do a business combination, typically 2 years. And if they don't get a deal done within those 2 years, they liquidate and basically pay you back $10 plus accrued interest, and so really reducing your downside risk. In addition, say they do announce a deal and it's a dud, you don't like it, and they do give you the opportunity to redeem at $10 per share plus accrued interest. So it's a trade that I consider heads we win, tails we win big, because in the worst case scenario, we're buying at $10, we get that $10 back plus accrued interest, treasury bills. And in the case when they announce a deal and it's still a dud and we redeem, those warrants have a lot of value in most cases. Then in the tails we win big scenario, some of these shares are going up 50, 100%, sometimes even north of 200%. So it is fairly lucrative. We get to earn T-bill returns with equity-like upside and T-bill-like risk. So that's why we like it. I just got to caution listeners not to get too excited about it, because a lot of these new issues are trading up pretty significantly. One that we actually did get a small allocation to in the recent IPO was SVF Investment, which is the SoftBank Vision Fund. SPAC IPO raised $525 million on Friday. That was a super hot deal, massively oversubscribed. So pretty lucky to get an allocation. However, this morning it's trading at $13, so 30% premium to cash for those units. So I mean, at that point, the risk reward is pretty significantly different than buying these at $10. So just a word of caution with respect to trading these things, because it requires a lot of due diligence and a lot of being careful out there.
Yeah, of course. What we always wanted to mention is at the end of the day, guys, you guys got to do your own analysis and risk assessment and how you want to go ahead and take your trades. But I think one of the biggest things that I've noticed in SPACs is that there could be definitely an arbitrage strategy put in here. And I think that's where you definitely come in here. How could we go ahead and look at these and how could you approach these to go ahead and get that arbitrage?
And so what we were doing a couple of months ago, back before the market became super hot again, and now basically everything's trading up to a premium to cash value, trust value, what we call net asset value, is if we go back a couple of months ago, you could buy a significant number of SPACs at a discount to their $10 plus accrued interest net asset value. You mentioned on Churchill Capital, there were those DirecTV rumors, and investors were pretty down on that potential deal. I don't blame them. SPAC investors tend to be interested in kind of earlier stage growth opportunities, and DirecTV is more of a sunset or declining business. And that added some weakness to the CCIV shares. And you noted they're trading in the 960, 970 range, which I thought was a great buying opportunity. We are long shares and warrants, which we bought in the summer at a discount. So got to disclose that. But nonetheless, I mean, Churchill and Michael Klein, who runs Churchill Capital, they have, probably a half dozen SPACs. I noticed that they filed S1s for 2 new SPACs, so they're going to be coming out with 2 more. He's a veteran of the game. Bit of a mixed track record. The Multiplan deal that they closed last year is trading below $8, which isn't great. And the Skillsoft deal that they announced last year have not yet closed with another Churchill Capital SPAC. Market's kind of lukewarm on this one. However, CCIV, if they ink this Lucid Motors deal, then I believe that will be taken very well by the market. As you can see, just on rumors, the stock trading nicely off that one. So, I mean, we view SPAC arbitrage as a pretty exceptional investment strategy, and it's unique because it's uncorrelated to traditional asset classes. You got your downside protection, and you got significant upside participation. And there's just a ton of deals being announced these days, basically at least one per day in our portfolio. I mean, in our arbitrage ETF, we own north of 150 SPACs. So basically every single day we're seeing a business combination. Chris, as you indicated, there's just so much going on out there.
Yeah, awesome. So again, we're here with Julian Klymochko. So you run a couple ETFs traded on the Toronto Stock Exchange. So that big one, of course, symbol ARB. So includes SPACs. So you said over 100 SPACs in that ETF.
150.
So I want 150 exact.
Yeah, as of yesterday. But we subscribed to 3 IPOs today, and likely subscribing to. There's 7 pricing tonight to trade tomorrow, and we'll probably subscribe to 2 or 3 of those as well. So it's kind of gaining. We do trade a lot and exit some SPACs and buy new ones and things of that nature. But well diversified portfolio.
Awesome. So I want to jump into some questions and kind of get your thoughts on overall 2021. So you talked about the large number of SPACs currently out there. So I guess just an opinion question. So do you think we see this slow down? Or is it going to take a correction, of some of the valuations of these SPACs? Do you think there's too many SPACs out there, and what's ahead for 2021?
Yeah, those are all good questions. I mean, in terms of the pace of SPAC issuance, it's just absolutely relentless. Ever since July, which was the first month above 10 billion in SPAC IPOs, previous to that, we were seeing kind of in the $1 to $2 billion per month, which was still significant. If we rewind to 2019, which was at the time a record for SPAC IPO issuance at 13 billion, 2020 just blew that out of the water with more than 80 billion in SPAC issuance. And I've expected it to slow down for a while after October's 18 billion in SPAC issuance, which was by far just a massive record, blew the previous year, which was 2019's 13 billion, out of the water in 1 month by more than 50%. But that continued into December with 12 billion in issuance. I thought it would slow down around the holiday season, but January, it is crazier than ever. We're not even halfway through the month, and we've had 8 billion of SPAC IPOs, and the number of issues is 34, with 7 more coming to market tomorrow. One key characteristic of the market that we do track is average premium to net asset value of all 305 or so SPACs in the universe. If we rewind back to spring of 2020, this was actually negative. So on average, SPAC shares were trading at a discount to their net asset value or their trust value, meaning, if they got $10 in cash and trust, they would be trading at $9.90 or something of that nature. And so back in April of 2018, the average discount was kind of 1 to 2%. In late September, that rallied to about 15% premium. So it totally reversed, had a bit of a downdraft heading into early November. The average SPAC premium almost went back to flat to 0. But over the past few weeks, it's rallied to an all-time record. In December, we hit a SPAC premium on average of over 20%. We're now right around 19%. And what a premium indicates is there's, you don't have that downside protection. If SPAC's trading at 12 and the cash value is 10, then it can fall all the way to 10 just with market beta, right? So definitely keep that in mind when trading these things. But on the other hand, some of these, post-deal SPAC equities, when they announce a deal, there's substantial upside. And you look at one like QS, which is a post-SPAC equity. They closed the deal trading as its own company. But I believe that one went over $100 per share after the deal closed. So there is significant upside. And guys like me are probably selling too soon because we generally sell prior to deal closing. But these days, keep that in mind. Pre-deal, they tend to be, pretty low volatility. However, once they announce a deal, they get extremely volatile. Where you look at CCIV yesterday or ACTC today, and double-digit gains, but the market turns, and those can come with double-digit losses as well. So just be wary of the volatility. And the other thing I should note is, we're always wary of paying large premiums pre-deal. There's a lot of high expectations baked into some of these SPAC sponsors, whether it's Social Capital, Dragoneer, or SoftBank, etc. They trade at large premiums, which I think is, somewhat. It's not really normal, signifying of a normal market, but lots within the SPAC space is new. So we'll see how those develop, and we're constantly monitoring various characteristics of this market.
Yes, you mentioned some of those big teams. That was some of my next questions. So we're seeing a lot of teams announce, their second or third or fourth SPACs. Is that something you pay attention to when you read through the filings, to try to subscribe to those deals? Or based on premiums now, do you just assume that those are going to trade at, high premiums and see strong interest from hedge funds and ETFs?
Yeah, certainly a SPAC sponsor's reputation plays a big role. And monitoring the filings is a really important part of our process. If you look at my Twitter feed, back in December, I did flag when Hudson Executive filed another S1 for an additional SPAC. And at the time, HEC, which we are long, did not have a deal. And, as you saw this week, some big news on that name, Hudson Executive. It's now a rumored deal, not a definitive agreement yet. But generally, when we see a new S1 filed from a sponsor, a SPAC sponsor team, that typically signifies that perhaps there's a deal coming down the pipe, or they're fairly confident in executing a deal on their existing SPAC. So that's something to take note of. And many firms have sort of turn this into a SPAC manufacturing operation, such as Churchill, Gorse Holdings, Social Capital. And a lot of firms are doing that these days, where they have some success with a SPAC. They just keep it going and pumping out a number of them each year, in addition to private equity firms such as Apollo and TPG. I expect we'll see more and more of that, kind of pushing out some of the smaller first-time entrepreneurs doing the smaller SPACs, and the space will get more and more filled with more so, teams of high caliber that come from these alternative investment management firms that have great networks and are kind of deal junkies. That's what they do for a living. Those are the type of SPAC sponsorship teams we expect to see more and more of into the future. And certainly that seems to be the case in 2021 thus far. We're seeing a lot of sequels and follow-on offerings. Recently saw ones from Switchback Energy, which is trading exceptionally well. And obviously Vecto IQ, Altimeter Growth, Vecto IQ Acquisition 2, Altimeter Growth 2, Star Peak 2. So we're seeing a number of follow-on offerings and SPAC sponsors that found success quickly coming back to the market to try to recreate the magic.
So if you can talk a little bit about that big SoftBank SPAC. So like this one was highly subscribed. If I remember seeing on your Twitter, it looks like you did get a small allocation. Already trading at a significant premium. I guess one of my questions is, given the premium before even splitting, is there a hint to maybe take that premium and trade already? And then also, do you think that SoftBank one was the peak of demand, or do you think maybe the next Chamath Social Capital 3, see even more subscribers for the deals for units?
Yeah, certainly Chamath is on a winning streak. No one won 2020 in the SPAC space more than he did with his social capital vehicles, conducting a number of successful transactions, whether it be Open Door, Clover Health, and now the recently announced SoFi transaction, and all of which have been massive winners in the market. So hats off to him. Continually monitoring, but his issues are perhaps the hottest on the street and the most difficult to get into. So we've never really been able to get allocations to that one. Those are more so probably reserved for Fidelity, BlackRock, Citadel, and Millennium. But nonetheless, well, that won't stop us from trying. As for SoftBank's SVF investment, as you indicated, super hot deal, as we expected it to be. If you read the S1, they did indicate they are focused on, obviously tech, they're focused, but they did give a hat tip to artificial intelligence. So my thinking is that they would do an AI deal, but that's to be seen. And as we all know that a number of SPAC sponsors do change their mandate if they come across something better. But it's a SPAC that we're super excited about. Glad to be long the units here, as you indicated, trading at a very large premium. So a lot baked into this one, and at $13 per unit, it really sets them apart versus other sponsors, especially as a first-time SPAC sponsor. But definitely SoftBank and Vision Fund comes with a reputation of great deal flow, which is one of the most important aspects of being in the SPAC sponsorship business. As for trading, I see us and Accelerate as having an agreement with SPAC sponsors in that we view ourselves as basically a bridge lender. We allow them to rent our capital. We subscribe to the IPO. They utilize these IPO proceeds to go and get a business combination and be able to execute on their SPAC business plan and ultimately close the deal and then have an interest in this new entity. And where we fit into this ecosystem is we provide that IPO capital into the market, into these SPAC transactions on the IPO or close to it. And we're not really short-term traders, so we will stick around until they do strike a deal. And then we typically exit prior to closing and recycle that into new SPAC teams. And so that's really how we see ourselves fitting into the SPAC ecosystem. We're not the type to, do it just for a quick flip. That's really not what we're in it for. We have a systematic process where we want to work with these teams and help them to get a deal done.
Awesome. So I want to talk a little bit about some of those recent rumors. So I don't know if you heard, but obviously you've seen, and we talked on headlines today. So CCIV, HEC, and then, the ACTC deal today. So large jumps, based on those rumors. What is, kind of the arbitrage ETF play here? Do you, sell part of the position, take some gains? Do you sell it all once it, reaches that net asset value? Do you keep the warrants or trade the warrants? What's kind of, your overall thought here on those large surges from the rumors?
Yeah, so with respect to CCIV and HEC, Churchill and Hudson Executive, so we are lucky to be long both of those, of which we bought back in the summer. So we typically take a longer term perspective, and we don't trade off rumors. We definitely wait until a definitive deal gets announced because, you look at Churchill Capital, people trading on the DirecTV rumors a number of months ago, they're certainly kicking themselves this morning as they were probably upset about that deal and sold on the cheap. To guys like us. So it's always worthwhile, I think, not to trade off the rumor, but to wait until the news hits. And you mentioned one which did strike a definitive agreement this morning ACTC ArcLight, which we also have a position in the unit, so the shares plus the warrants. And once they do announce a definitive deal, we exit systematically. So the way that we approach it is we'll split that into shares and warrants, and we'll exit the shares over the next 3 months, which is the average timing between definitive deal and the vote, because the vote's real important to us because it provides that downside backstop at the $10 plus accrued interest. So we like to have exited the position by then, and we then hold the warrants until they get called, so longer term.
Awesome. And then I know you're more of a net asset value guy and valuation, but I'm wondering, are there any, SPACs out there pre-deal or new upcoming units, that are maybe on your radar that you think are undervalued or that viewers should be paying attention to that maybe they aren't aware of?
Yeah, there's a couple really interesting SPAC IPOs coming up. Number one on my list is the Liberty SPAC. Liberty, I'm a big fan of John Malone, the cable cowboy, and his sidekick, Greg Maffei. So I'm definitely looking forward to that one. There's also one, actually, I can bring up the ticker for that one. That will be LMACU. Another one that I expect to be super hot, and I'm looking forward to it, is the Thoma Bravo Advantage, TBA/U. This is a very well-respected tech buyout firm that has been super successful. This is the first SPAC from both of those sponsors, Thoma Bravo and Liberty, but those are definitely ones to keep on your radar. I assume those deals will be super hot. So if we can get an allocation, I mean, we'd be super happy about that, but it's going to be crazy competitive. But nonetheless, it's worthwhile watching in the IPO market and the secondary market. Who knows? Market conditions change dramatically in SPACs. Just 2 months ago, we were seeing a crazy amount of deals with 20% or 80% of SPAC IPOs breaking price and trading below $10. And that allowed us to load up on many super high quality SPAC sponsors at very attractive valuations. I see a kind of deal rumors circulating, or a lot of chatter regarding Pine Island PIPP shares, which were issued in November 17th. And I was pounding the table at the time because you could have bought them super cheap in the 990s for the units. And now the units are trading around $12. And, there's a number of those that had the same characteristics. So it's worthwhile paying attention to the cycles of this market and the change in sentiment, because you could scoop up some good deals. So I definitely encourage listeners to try to be opportunistic about it.
Awesome. So yeah, a big shout out to Julian for joining us on the show. I got to give you a personal shout out. I've followed you on Twitter for a while, and when you dropped that scoop on HEC back in December, that is actually when I bought shares of HEC based on them launching that second SPAC. I think that's a key thing that I'm going to start paying attention to. Some of these SPAC sponsors launch additional deals. Maybe that means they're wrapping up the first one. So go ahead, guys. If you don't follow Julian on Twitter, I dropped it in the chat a couple times, and it is in the description below. So thank you, Julian, for joining us on the show once again.
Yeah, thanks, Chris and Mitch. Always happy to be on SPAC Attack, so thank you for having me.
Yep, look forward to bringing you back. We'll see you next time, Julian.
All right. Bye, everybody.
All right, guys, as you guys can see, this is why we do what we do, guys. We went over into some SPACs. We looked at some of the ones that were on the radar. And not only that, but you got both perspective. You got me asking some questions. You got Chris asking some questions. And at the end of the day, guys, if you guys have any questions that you guys need answers to, definitely put it in the comments below. We'll definitely reach out to whether it be executive, experts, or even just someone that you guys see on Twitter that's getting some good information. Let us know, and we'll definitely get back to you guys. All right, guys. So like always, want to definitely give a shout out to everyone that's in our chat. Go ahead and smash that like button. Let's keep going through. Like always, we're going to be back with some great shows for the rest of the week. Chris, anything you want to go ahead and preface for the rest of the week? I think I might have lost Chris here.
Yeah, so reminder guys, that big show tomorrow, we have the team from Lion Electric and Northern Genesis Acquisition. Again, that symbol NGA. We will have an exclusive interview with that team. You don't want to miss this one. Remember, it's an electric bus, electric vehicle play. So really excited to have them on the program tomorrow, 11 a.m. Eastern time.
As you guys heard, we'll definitely have that exclusive interview, and super excited like always, because at the end of the day, we're growing with you guys. And I'm going to go ahead and full disclosure, guys, I got one into the portfolio, RPLA replay. I know that you guys have seen that SPAC before, so I wanted to get that full disclosure. Got it yesterday. I'm going to keep working to try to get some of these as near to 10 as I can, guys, as I've been talking about. That's the way I like to play for them. So we'll see you guys next time on the SPACs Attack. Like always, guys, Chris is here with the brains. Keep working hard, and we'll bring it back to you guys. So we'll see you tomorrow on the SPACs Attack.